Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is March 29th, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at market trend and our strategy. U.S. stock market uptrend is under pressure, and I sold all the index ETFs, and I sold some of the stocks, but I still hold a few of the stocks. I'd like to share with you the index charts, the daily charts. First of all, is the DAX index. German DAX index is still in the uptrend. It pulled back a little bit, but it hit 20-day moving average and bounced back up. So looks like it may have a short-term correction, but overall the trend is still up. That's a DAX index. China Shanghai Stock Exchange Index is very strong. It's in the uptrend. Nasdaq Composite, and it pulled back really hard, and on Wednesday it really dropped a lot. The volume is very high, but on Thursday it looks like it tried to find support on 50-day moving average. If the market finds support around 50-day moving average, it will have a hope to go up. However, if you play this rebound and buy the ETF right here and under the low of a Thursday, that would be the stop price. So if the Nasdaq fall below the Thursday low, the market will have a potential to go down again. For now, it looks like the market is right at a 50-day moving average, and they may find support there. Mid cap and looks similar, but it's above 50-day moving average. It's a little stronger. Small cap and also a little stronger than Nasdaq. It's above 50-day moving average. It may find support here. SP 500 index, and they pull below 50-day moving average. So large cap is not perform as good as a strong and the small caps. And it looks like the distribution day volume is much higher than accumulation day. So the distribution day means the down day, on the market going down with a higher volume than up, and that's a distribution day. Those two distribution day on Wednesday and Thursday. Friday is not accumulation day because the volume is lower. Last week we had some accumulation day here, but this week the distribution day just cramped up. Gold index, gold rebounded, and overall trend is down. It's still down. Silver is still downtrend, but it rebounded from the low. Gold mining ETF rebounded and now pull back again, still in the downtrend. US dollar still in the uptrend, but it pulled back the short term. Crude oil index still in the downtrend. It tried to find support on the low, but the overall trend is still going down. This is a China ETF. It's consolidating. U.S. real estate ETF, it rebounded pretty strongly, but it pulled back again. Now it's below 50-day moving average. Copper seems like try to go up, but hit the high, and then copper actually jumped up pretty quick, but it didn't last. It came down again. Mortgage bond is still in the uptrend. Mortgage interest rate is still in the downtrend. It's not changed. Semiconductor ETF pull back pretty hard and try to rebound. Social media index ETF, it's finding support on 200-day moving average. This index may have a hope to go up. Solar is in the uptrend. Crude oil ETF is the same as a crude oil. Energy sector is still in the downtrend. Financial sector ETF, right now it just fall below 50-day moving average. Let's see if it can hold support at $23.73. That's the previous low. If it can go back up and hold support around this area, then this thing has a hope of going up. If it cannot hold this support, it may just go down. So next week is critical. Let's take a look at the stocks. And the first list of stocks are the stocks that's in the uptrend, but they're too extended to buy. GRUB and ULTA. And second list of stocks are the ones that broke out, and they're still in the buy range because they all pull back. So they pull back to the original breakout point within 5% of the breakout point. That's the buy range. Third list are the stock building base. There's no stock in that list. And fourth list are the stocks in trouble. Those are the stocks previously are very high, but they went up too fast, too quick, and now looks like they're under distribution. So if you have bought those stocks, it's a good time to take profit and get out. Biogen, BIIB, NXPI, and SONC. Those three stocks are showing distribution. Let's take a look at the first list of stocks. The stocks are too extended to buy. They're too high. Umbrella, those are very, this stock is on a very strong uptrend. It pulled back a little and just bounced back up. It didn't pull back to the 50-day moving average. If it pulled back to 50-day moving average and bounced back up, that's another buy point. Right now, it's just pull back to 30-day moving average and bounce back up. GRUB. Grubhub. This one breakout right here is a breakout point. This is another breakout point. Right now it's too high. Alta is also too high. No buy point. Those are the stocks. If you bought them, hold on. But if you haven't bought them, it's too late to buy. Apple and is near buy point because it's pulling back to 50-day moving average. Apple broke out right here. And now it pulled back to 50-day moving average, and it's another opportunity to buy if it can rebound from 50-day moving average. AYI, same, and pull back near 50-day moving average and rebound. That's a buy opportunity. And Facebook, and breakout point is $82. Right now it's close to that breakout point, is within 5%. LinkedIn also had a breakout right here, gap up, and pull back to 50-day moving average, also a buy point. Palo Alto Networks, this one already rebound from 50-day moving average, so it's a buy point. QRVO, and pull back and rebound from 50-day moving average, that's a buy point. Twitter, breakout from a $50.11. Now it pulled back near that price, so it's a buy point. Visa is kind of troublesome. Visa has distribution day here close below 50-day moving average. So this one is within the previous breakout buy point, but I would not buy this. I would be very hesitant to buy this stock. Fourth list of stocks that's if you bought them previously, you should have a lot of profit, and then it's a time to take profit. Biogen has a very nice uptrend and gap up, just jump up, but it closed. And open price is almost the same. It forms like a cross from candlestick. This is a turning point. The second day it closed down, and third, fourth day just keep going down. So as soon as you see a close like this, and second day it open lower, that's a sell signal. So right now it may find support somewhere around 50-day moving average, but the lesson to learn is if a stock has a very sharp run up, as soon as they started going down, that's a sell signal, because there's a lot of profit taking going on when the stock go up like that. NXP Semiconductor, similar, and gap up and go up again as soon as it close below the previous two or 3 days low. That's a sell signal. So, and most go back 3 days and take that day's low as the stop order. So you should be getting out around $103. Right now, this stock may try to find support around 50-day moving average, and we have to wait and see what kind of pattern is going to form. Sonic, this one is in trouble. It has a sharp run up and then suddenly has a huge drop down, and break 50-day moving average and volume extremely high. So if you use a 3-day rule, if a stock has a run up, go back 3 days using the low of that day as a stop. You should be getting out at $34. For this stock, because that 3-day low is very far away from the high, so I would just go back 2 days using that previous 2 days low as a stop order. So anyhow, those are the list of the stocks. I'm sharing it with you. And what to do in the current market. And it's very important to have a stop order in the current market. If I just bought a stock, I would set a stop order 7 to 8% below the purchase price. If I have held the stock for a while, it has a nice profit, I would just use the major support as a stop price, or just go back 2 or 3 days, use it the 2 or 3 days ago, the low of that day as a stop order. So it's very important in this market. If the stock started going down, you gotta get out. That's all for this week. See you next week.